Well, in his latest note to his investors as well as clientele at Oaktree, veteran investor Howard Marks has actually spoken about the much anticipated and the long-standing debate between value as well as growth investing. Howard Marks, in his latest memo, writes about how exactly he views the art as well as science of value investing, especially in the increasingly efficient and complex world that is being faced by investors today. Now, what he talks about as far as value as well as growth investing is concerned is that he notes and he acknowledges that growth stocks have quite meaningfully outperformed value stocks as far as the last 13 years are concerned. He also says that earlier, when he spoke about value investing, the typical definition actually included value investing that comprised buying stocks if the trading price of the stock or of the company was below the intrinsic value that was derived from various valuation metrics, including prediction of the free cash flow. Now, what he was saying as far as the growth investing is concerned is that he said that growth investing usually meant targeting companies that were expected to grow quite rapidly. However, one thing that he says as far as valuation is concerned, he says carrying low valuation parameters may not be synonymous with being underpriced. In fact, what Howard Marks says is that only pursuing low valuation metrics can actually lead to value traps. He also states that value and growth investing should not necessarily be viewed as mutually exclusive. Rather, what he is saying is that value investing should consist of buying whatever represents a value proposition. In fact, what he is saying, value investors so far have seen bonanzas in periods following bursting of bubbles, and he speaks in depth about the IT stocks, the tech stocks. He says that some of today's lofty valuations enjoyed by these companies are quite justified by the very strong future prospects that they have. Now, he states something very important. He states that high valuation may not mean overpriced, and at the same time, low valuation may not mean underpriced. Now, what he is saying also, he speaks about growth stocks, given the fact that they have actually and meaningfully outperformed value for the last 13 years, and he believes that to a certain extent traditional value investing has now gone out of the window, given the fact that you are in a very complex world, and also finding value in terms of finding a bargain in very efficient markets may be quite tough. So this, he believes, will force value investors to actually change their stance. And again, he says that we are in a very complex world where a very wide range of truths is actually required for success. He believes that the widely discussed distinction between value and growth has actually made some people believe that they only had hammers. Rather, they actually potentially had access to a whole toolbox. So he believes that given the fact that the investing sentiment or the investing world or the investing environment has changed, he believes value investors too must change their style.